What is up, YouTube? It's Profit Day Trader here, and today is another beginner's course on how to become a day trader. These are terms and lessons. So in today's lesson, we're going to go over what volume means and what float means. We're going to go over why they're important and how you can use them to make money. So if you're interested in learning all things about stocks, consider subscribing to this channel. Like this video if you like this content. It shows me that it motivates me to keep making this kind of stuff for you guys. So yeah, so let's dive in. Okay, so first off, we're going to start out with float. Now, float is actually very simple. It sounds more complicated than it actually is. So all the float is the number of shares that a company has to offer. So the best way I can explain this is, say a trading card company. They come out with a million baseball cards. That's all they have is a million baseball cards. That's all that exists in circulation. That's the same thing with stocks. So what a company does is, if a company wants to go public, they want to make money. They want to raise capital for their company. So they'll go out, they'll get listed on the stock exchange, and they'll say, okay, we want to offer the public the initial public offering, which is an IPO. We're going to we want to offer 1 million shares, and then we're going to at $10 a piece. So they want to raise $10 million for the company. So this is their initial offering to the company. Now, a float for a company can go up and down depending on, well, really only up, but it can go down, but that's if the company's failing. But the amount of shares that exist, it's all that exists. It's all that can be traded. So once they come out with their first 1 million shares, the public buys up all the 1 million shares. Now the 1 million shares gets traded between different traders. So when you go to buy a share, you're actually not buying it from the company directly after all the initial shares have been taken up. You're buying it from somebody else, another trader. So that's all really float means. It's not very complicated. Now, why is this important? Because specifically for day trading, the lower the amount of shares, the more that the price moves. So in this situation here, 1 million shares is not a lot. So when a company has good news or bad news or whatever the case may be, or for just random trading that day, the lower the amount of shares, the more they get turned over, the more that price moves. And that's what we want to see as day traders. We want to see prices go up and down very quickly so we can capture the profits on the long side or on the short side. And again, if you're not familiar with any of these terms, it takes a little while to learn this. I'm going over these lessons every week, so look back for more videos if you're unfamiliar. It's going to take a little time to learn this stuff. But just understand that it's very, very important as a day trader that we look for lower float stocks. So a company like Tesla, let's say they have 1 billion plus shares. And Tesla's probably the best example because Tesla moves a lot. But let's say a company like Amazon. Their stock is never going to move that much. So there's not really much money to be made as a day trader because they have so many shares that not a lot of people hold on to those shares forever. So you want people that are just buying and selling their shares very quickly. You want to be in the mix. So that's why having low float is very important. So again, we want low float. We don't want a ton of shares. As day traders, we look for low float. And how do you use it to make money? And again, it kind of just goes into what I just said. So again, when I do my scans for the day, I scan volume, very important. Volume and float go hand in hand together, which we'll go over in the next segment. But I look for volume and I look for how many shares that they have. Now, the reason why that's important is because if there's super high volume and super low float, that's where that price is going to go up and down very quickly. So again, that's how you make money with the float. If you have high volume, but there's a ton of shares, the price isn't going to move as much. So when I go to build my watch list, when I go to decide what I'm going to trade for the day, I look for that low float. That's very important. I think volume's a little more important because that's really with the activity of the day, but float is also very important. So that's how I use that every single day to make money in the stock market. So next, we're going to go over volume, and volume goes hand in hand with the float. Okay, so next up we have is volume. Now, volume is very, very, very important as a day trader. Now, volume and float go hand in hand, and you'll see why just in just a second. So all the volume means is, I know they use these different words, but volume is actually very simple. Volume is just the amount of shares traded in that either minute, hour, day, etc., whatever you're looking at the moment. So if you're looking at a minute chart, the volume is going to show you how many shares are traded within that minute. If you're looking at an hourly chart, it'll show you within an hour, daily, etc. So the reason why this is so important is, as a day trader, we're looking for other people that are trading. And the more people that are trading, the better odds we have of making money in that trade. The better odds that we're going to be on the right side of the trade, pushing momentum, pushing volume. So if you see a stock go in a certain direction, there's somewhere here. So when I'm trading, I'm paying attention to the stock. I'm paying attention to the price. I'm paying attention to volume, paying attention to everything. So if I see a stock, it's kind of hovering around, and all of a sudden I start to see it go up, and all of a sudden I see the volume, all of a sudden the volume starts to go up at the same time. As a day trader, I'm putting the odds in my favor. Like, okay, the stock price is going up, the volume's going up. The odds are in your favor that this is going to keep pushing up. So that's where you start using the volume in your favor. So you start looking at it and being like, okay, I want to be on the same side as the volume. If a bunch of people are buying, I want to be on the buying side. If a bunch of people are selling, I want to be on the selling side. So that's where you start using volume. That's very important to be on the right side of the volume. So again, you want to pay close attention to this volume. You want to pay attention to how it's being traded. So which direction it's going. So again, volume is, if you're still confused what volume is literally the amount of shares that are traded. So let's just give a fake example. So say I looking at a stock, I'm interested in the stock, all right? So I'm like, you know what? We'll just use GameStop as an example. Choose GameStop because GameStop's pretty popular right now. So say I'm looking at GameStop, like, I like GameStop. I'm going to buy 100 shares of it. So I go in, I buy 100 shares. Well, that 100 shares is actually 100 volume. So this equals volume, 100 volume. Now, now something very important to remember. When you buy 100 shares, you increase that volume for that minute, hour, day, whatever chart you're on. You increase that volume by 100. But when you buy 100 shares, there's somebody out there who's selling you 100 shares. Also equals 100 volume. Sorry, my handwriting's a little goofy. So when you go, every single trade that's made, buying's 100 volume, selling's 100 volume. So that's 200 volume that was increased for that minute, day, hour, whatever it is. So understand that if you see volume 100 million, it doesn't mean that 100 million trades were executed. It means 100 million individual shares were traded and bought on the buy and sell side. So it's not as clear as people look at volume. Some people are confused. They think buying is just buying, or it's just selling, or they're not really sure. What they think it's the total number of trades. No, it's the amount of shares. So understand that's very important. So again, it's the reason why it's so important is because, again, we would be on the right side of the trade. This is how you use it to make money. As a day trader, we're all trying to make money. I'm trying to make money. You guys are trying to make money. We all want to be on the right side of this. So we use volume as another way to put the odds in our favor. Doesn't mean we're necessarily going to be right. I could see this going up and thinking, okay, the volume's going to go in my favor. It's going up. The volume's going up, and the price is going up. But all of a sudden, it could not do this. The volume was coming in because a huge seller was coming in, and it goes down. So again, we're just more likely, all you can do as a trader is putting the odds in our favor. So again, that's all volume means. Don't be scared of these terms. A lot of times, again, they're just very simple. They're very simple. They just use more different words just because whoever invented this decided to use different words for some reason. So again, yeah, that's it for the lesson today. If you're interested in stuff like this, consider subscribing. I really appreciate it. Thank you guys so much, and I'll see you guys in the next one.